description of what it's like, it's unlike anything I really have ever seen. And if price was an indication of demand, and at least over the last 3 years, then everyone would be fooled. And I think, the mainstream, certainly, who uses price as an indication of value and of demand, is missing this by a long shot.
And for listeners out there, we're going to ask the day that we're recording this interview. It's on Thursday, November 10th, 2022. Paper silver prices in US dollars are $21.66. We've had a rally today, shockingly, on a weak consumer price index number. So the inflation number was cooler or weaker than expected. And yet we had a nice little pop in paper, gold, and silver prices. Gold prices popped to $1,754. But you alluded to this earlier, the paper prices for the metal there's a big dislocation between that and what the retail investor is paying with premiums for silver coins.
Yeah, I mean, a massive dislocation. And, if it were just that, Jay, I would be less concerned, because you could attribute that to inefficiency. You could attribute that to overextension, where you're just overwhelmed with demand. You are inefficient in production or capacity, trouble getting blanks, whatever lame excuse you want to throw out there. I can understand that, and as one of only 27 U.S. Mint authorized resellers in the world, certainly the U.S. Mint has in many ways shaped my career, but I look at it as the model of inefficiency. Now, before I really get to what I'm getting at here, if you just would have told me, as far as the U.S. Mint is concerned, that it were silver eagles, because they haven't come back down since more or less March 2020. They've been elevated. But if you look at the amount of business that the industry has done over the last 3 years, 98% of it has been in silver. And for the U.S. Mint to call me in June of this year and say, hey, we are going to curtail gold production by 50% into the second half of the year, really has me scratching my head. But I will just throw that one out there. But as far as just looking at it from the retail perspective, yeah, the demand is way dislocated from the price. But here's the thing. When I say, is price a indication of value or demand, if you look at what's happening on the London Metals Exchange and on the COMEX and the backdooring of silver out of SLV by the authorized participants, in the case of the London Metals Exchange, we've seen a massive bleed down of supply, and they are contracting at a massive rate, where the amount of silver in the vaults at the LBMA is about 300 million ounces. And, you're talking roughly about, at the pace that we've seen deliveries, where in July, over 46 million ounces were delivered off the exchange, out of the ecosystem, which is a really big deal, because when you talk about liquidity, leaving it within the LBMA or leaving it within the COMEX, even if it's not for sale, gives it immediate liquidity. When they leave that ecosystem, when almost 47 million ounces get delivered out, it's a one-way ticket. Ain't ever coming back. But at that rate, the LBMA would literally, in theory, be out of all silver by mid-2023. When you look at COMEX, over the past 18 months, 70% of the registered silver on COMEX has been delivered, not just moved to the eligible category where it's tied to a warrant and not for sale, but delivered. And the registered stockpile on COMEX right now is the lowest it's been since 2016, of 35,000, just under, about 35,500,000 ounces. That's enough silver to cover 7,100 contracts. That's it. And that's the price setting mechanism of the world. We're seeing 1 million plus ounces, it seems, every day being delivered out of SLV by the authorized participants, taking possession with share redemptions, which give them anonymity. But the bottom line is simply this, is that someone is draining the COMEX of metal. One last thing, at least in terms of COMEX and the LBMA. In one day last week or the week before, 5% of all the 100-ounce gold bars were delivered off of COMEX. 3 weeks before that, 45% of all the kilo bars on COMEX for the mini contracts, about almost 26 million ounces, were delivered. And when you talk about the significance of delivery, it is that all liquidity is lost once it leaves the system in terms of reassaying. This is a one-way ticket, and the biggest money in the world, the most sophisticated, well-informed, influential money closest to the information, is using the manipulation of price and of rhetoric to run cover for literally emptying the shelves of all of the physical metal before whatever they see coming comes. And so when I talk about a elevated price on retail, if it were just that, I'd be, yeah, okay, it'll correct itself. What is really making me really concerned, Jason, really concerned as a business owner, is that from the very, very top on down, the supplies are disappearing at levels no one has ever seen before, ever.